Welcome back to the channel, Crypto Trend Trader with a quick market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so we just spoke about this in the last video, essentially how we've been filling out this triangle, this flag right here, and I was expecting essentially after we got this fake out right here that we would essentially like get another push up and then sell off, and when we did, laid out some clear price targets. But what I want to do is not talk about that last video. As you can see now, this is turning into more selling than buying, but we're getting the green area right here for potential accumulation. So, you want to basically, if you took the short like I did, you want to get out of it right away as soon as we got down to, our target. And obviously on this one, you can't really see where the target's at, but if we switch over to, this is where we talked about potential target for a longer term move right here. But as soon as we saw the knife stab down here and saw that violent move, we knew essentially same thing happens every time. The candle closes and then you get one more little push down and then it will get bought all the way back up. So as soon as it gets bought back up above the close of the previous candle, you want to make sure that you're out of that trade. So as soon as essentially that closes, I'll move my stop loss back down to the end of where that candle closed. So if it pushes back up, it will take out my short and I will be back out of the trade in profit. So that's what we're paying attention to. Now, while I do think that we're going to get continuation to the downside here, I want to tell you exactly how I knew to take this trade. I always look at different exchanges because they tell you little secrets. And sometimes the bots mess up, sometimes traders mess up, people jump the gun. But this was a very clear signal. It's how you beat the bots every time, how you beat the traders, how you beat the market. You can trust this 95% of the time. Look right here on Bitstamp. Somebody jumped the gun and tried to sell into this, and we got a massive wick down straight to our target, exactly to the 89. And then we consolidated, got the breakdown, and then came back down to the 89. And that's exactly where you want to take profits at. That was our exact target for the move down here. So now what we're paying attention to, though, is look on the other exchanges. That was exactly at 3 a.m. That happened at 3 a.m. and got bought straight back up. Here's at 3 a.m. No price action on Kraken. Here's at 3 a.m. on Finex. No price action on Finex. Okay? Somebody fat fingered it. Somebody jumped the gun. Somebody, a bot messed up. Whatever it was. This got bought up instantly. If we switch over to like a 1 minute candle, you can see this is exactly how you beat these other traders every time. Look at that. That can only be done by a bot. That can only be done by a bot. It sells off in 1 minute, gets entirely bought all the way back up to the price action. So somebody unloaded a massive position and then immediately right afterwards somebody just puts in a buy right back at like the top area where it was at. So it essentially just fills the books back up all the way to that point again. And then you see a little continuation and then consolidation back to it. But it happens all the time. It's the easy way you can beat the bots, and it's why you should be watching multiple exchanges all the time, looking for little clues from the market on exactly how to beat it, how to take advantage of it, and how to collect that free money, okay? So that's exactly what we did. We knew after that it was going to sell off, so immediately on the close of this candle, took the short, got in the short from 49.01 and closed it at the 89 EMA. It's only a 4.3% move, but with 5x leverage, you're looking at over 20% on the position. So you can't beat that. It's 20% free money. I mean, this is like 95% success rate when this happens right here. When you see that clue from the market right there, that's the market saying, hey, take this free money. It's basically a little premonition to what's about to happen. So as soon as we come down, we expect it to come down to the 89. As soon as we see it come down to the 89, we always expect the candle to close out. One more push down. As soon as it gets bought up below the close of the last candle, it takes out our stop loss and then moves back to the upside. And then what do we expect to happen then? We're now going to retest the next significant moving average, which is going to be our 55 right here. And then what we're trying to do right here is now we've confirmed the 8 and 21 cross on the 1 hour. So what we expect to happen is we need to get at least above the 8 and consolidate in between the 8 and the 21 and make them tighten up and then potentially move back to the upside and save this cross. Or else we're going to get rejected right here and move down, and we're just going to continue down to the downside. So now if we switch over to the 4 hour, you'll see that the way I use these Fibonacci moving averages, the different moving averages I use correspond perfectly with, not only by using fib numbers, you can switch between time frames and the moving averages basically stay in the same place. To use different moving averages, you can see what's happening on a longer time frame. So in this case, our 89, our purple moving average on the 1 hour is going to line up almost perfectly with our 4 hour 21 moving average. So, and obviously if you multiply 21 by 4, you get 84, which is almost 89. So it's nearly perfect. And that's why they line up perfectly. And that's why I use the specific moving averages I do, is because they're basically increments of the hours in the day. It's all the Fibonacci sequence. It allows you to essentially see what's happening on longer time frames while looking at a shorter time frame. So you can see the substantial, significant moving averages on the 4 hour time frame when you're looking at the 1 hour. You can see the daily when you're looking at the 4 hour. You can see the daily when you're looking at the 1 hour. You can see the weekly when you're looking at, etc., etc. So that's why I use Fibonacci numbers. I've never seen anybody else that uses Fibonacci numbers. Most people use random stuff, 9s, 20s, 50s, all that stuff. That's great. It's good to do, but there's a reason Fibonacci sequence, works and occurs naturally in nature and is so significant in markets. So that's a little explanation on that. But as you can see, that's exactly what I was saying. We essentially closed it perfectly at the 21. So then that's where we're going to set our stop loss at. So we sell back off here, and as soon as we come back up and take it off, it takes us out of our short. We lock in our 20+% profit on the position, and then what we're going to see happen is the 21 got saved right here, but we closed down below it. So now if we get now a close and then an open and then a close again below the 8, we're going to expect, potentially this tightening range and then potentially next target to the downside. So if we cannot get back above the 21 and we just oscillate in this range, they're going to get closer and closer together. So then if we burst to the upside, we'll have saved the 821 cross and we can get continuation. If we burst to the downside, we're going to confirm the 4 hour 8 and 21 cross and get a violent dump. And that violent dump is most likely going to take us down to like that $36,000 range. $36,000 lines up perfectly with our 55 exponential and our 50 simple, which is what these two green lines are that are almost right on top of each other. It also lines up perfectly right here with our parabolic, our binary pivots. These 3 blue dots right there, that's our binary pivots. So right there around 36,000 is exactly where we're expecting to come down. Now we would expect once again for that to get bought up aggressively because we are still in a confirmed uptrend and we're trading with the trend, and moving averages should be used for entry points. That should be our buy areas. When we pull back to a moving average, we take that as a buy. And you'll see if you did it right here, you collect that move back up there. If we get continuation to the upside, you got almost the perfect entry. If we do not and you get stopped back out at that entry point, that's a clear pivot on the market, that moving average. So even if you're wrong, you know you're wrong right away, so you don't have to run a big stop loss. Let's look down here also. This is exactly what we're talking about. The histograms, we're going to see if we got the bounce off of that and a breakout to the upside. Now we're below it, so we're going to drag this down. We're going to change this slope back over to red if we stay underneath it long enough, and then we're going to get more continuation to the downside. And just one more thing, I want to switch over to, actually I want to show you on the RSI as well. This was a clear signal something was going wrong here. We were below this. The RSI was below the EMA of the RSI. The white was below the yellow consistently. And then we finally came back up to it. We basically tried to get above it, got rejected. Tried to get above it, got rejected, 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 and then the dump. So now, maybe we get all the way back up here, get rejected again and get the dump. Maybe we save it. But, once we got that flip on the Stoch slope right here, we got multiple S's, hard sell signals. We left the bullish control zone. We left the red area. We got down below the 80 on the Stoch slope. That told us, one more level of confluence, and that's all we're looking for. Now let me flip over this real quick. This is what I was paying attention to also. Look at this. We're slowly putting in lower high, lower high. This one kind of broke back up to the same area, but lower high, and we essentially are forming like this little arcing channel, okay? And then the low down here, the low down here, the low down here. So when this came back up and started coming up, we expected it to sell off right there. at that same area. Now, where's it going to come down to? It could come down to the same area, bounce back up, and break out to the upside. It could break all the way down to the bottom of the channel and come down to 10 if it wants to. But regardless, we're paying attention to what happened. We're taking profits along the way, and we're just looking for essentially now what's going to happen. What is the market going to tell us? Because we could get a situation like this where we break down, we save the moving average, and then we get right back above it. But now look, we've taken out the 50, which is just like we were talking about. The 50 had saved price action all through this area repeatedly. The green moving averages saved it, saved it, saved it, saved it. And then look, we broke down from them. We got our little secret. We got our hint. We got our predetermined move from the market ahead of time. So now look, if we get rejected again here, what's our next move? We're looking down here at that 200. Where's that at? That $36,000 range. That's our 200 simple, 200 exponential. Let's switch back over to the 4 hour and we'll see where that's coming in at. And now look, what's right at that 200? That's our 50-55. Okay, and of course, if you take 50, you multiply it by 4 because we're on the 4 hour instead of the 1 hour. What's it come out to? Comes out to 200. So it's simple, and it's very simple. But Fibonacci numbers work. There's no reason not to use them. And that's why I like to use the 50 is like standard traditional market moving average, simple, and then the 55 exponential works a little better for crypto because of the volatility. So, and it's also a Fibonacci number. So that's why I use 2 greens and 2 blues, is because I'm using the standard one, the 50, and the 200. I'm using the crypto extreme volatility exponential 55 and 200. 55 is a Fibonacci number. The 200 is not, but it works perfectly. So well, there you have it, guys. I just wanted to do a quick update on that move. Basically, tell you exactly how we knew that was going to happen. We got the little signal from the market. We knew we were going to basically find support right here at that same level also, because we had the close here, we had the close here, we had the close here at the same spot. We almost always get this exactly like I was saying too. We get a violent dump, sell off, and then we get a little push down, and then what happens? It gets bought straight back up, but it leaves that wick behind. So as soon as you get back above that previous candle, as soon as you start selling off, move your stop to where the candle closed, and then if it goes back up, you're out. Same thing. Sell off violently, continue to sell off, and then it's a fake out. As soon as it takes out the bottom of the last candle, continuation, and you're out. Or you're in if you took the buy off that level. Either way. Same thing right here. Closes, opens, sells off, gets bought right back up, leaves a wick behind, takes out your stop loss, pumps back up, and that's all that was. All this is probably right here is a dead cat bounce off that little violent sell-off. So now we're expecting continuation down to potentially somewhere in between 36 and 37,000 to hit our next target right here. Now, in the event that this starts looking bullish and moving back to the upside, and we can start closing back above the 8 and 21, maybe we'll enter again. We'll have to play that by ear, but this is exactly what I was saying right here. We're now getting, for the first time along this whole trend, where we're starting to see more selling than buying. Because what this is doing is it's taking essentially our previous total, 182,000 on here, 477, and then what it does is it takes the candle and it takes all the buying, all the selling, multiplies it by the volume based on the buys and the sells, and then determines was there a net negative sell or a net positive buy, and then it either adds or subtracts that total from the previous total, and then it takes that into the formula and uses that to tell. So once we start putting in negatives here, it means there's more net selling than there is buying. Then more buying starts coming in, and then more selling starts coming in. So that's essentially telling us volume is nice and everything right here. Price action on these candles is nice and everything, but this is telling us the total net volume of buying and selling. It's telling us essentially what smart money is doing, because it's easy to get a candle like this, like we were just talking about, and this is going to be a short one. It's easy to get a candle like this. You get a decent amount of volume come in right here and sells all the way down, but the reason this volume is so low right here is because it happened in 1 minute. So this didn't take a bunch of buying volume to get back up. There was a big empty spot in the books from whoever just dumped this price action. They cleared out the books right there and then immediately just bought it back up, probably with 1 or 2 buy orders. So you just market buy and it immediately pushes the price back up. You get absolutely wrecked. So they clear out the position on the way down, get right back into the position, or just put orders back in the books right in the gap immediately, because it's a bot, so it can do it instantly. It literally can dump the price and then put the order right back in the book with absolutely no buying happening, only selling. So then you end up with like a low amount of volume on that candle in comparison to, like, say this candle right here, where it had much less movement, but it had selling volume and it had buying volume. So there's more total volume happened in that candle. So this looks like it would have had way more volume typically, but that's when we look over at our indicator, we could see, if we were using this on that same chart, that there would be almost no actual volume on that candle substantially, because there wasn't a ton of buying that went into the place. It was just the selling and no new buying coming in. So this essentially tells you the net buying and selling, as where like just the volume on the actual candle or just the movement on the candle does not tell you the full story. So it's just one more way that we gain an advantage on the market. And that's what it's all about, gaining a repeatable advantage on the market that you can use to make profits. So there you have it, guys. Keeping this one quick. Crypto trend trader, a little Bitcoin action, a little volatility, a little hack on the market, and I'm out of here.